Unless you're not setting a standard, we cannot compare. For example, the 8 hours you are allotting for the workers to complete the specific task. The standard costing allow the evaluation of individual or department performance. So each and every one is responsible to complete the specified objective what you are setting. So that's why the standard is very important. If you are not setting a standard, it is very difficult to take a proper decision. So that's why the standard which is comparing with the actual, right? Hello everyone, a warm welcome to one and all. I am Natesh, lecturer in commerce, Vidhyaashram First Grade College, MYSURU, the Temple of Excellence. We are in the Unit 5, Session 1, 4th semester B.Ba, Management Accounting. The chapter name is Standard Costing. Okay, and today my agenda, you will get to know the complete how the historical cost is when you are comparing for, there are too many costing techniques we are talking. So the management, they are trying to get more clarity about using a standard costing, why they are using as a common student, as a cost account, how they want to determine, okay, even the meaning of standard cost and the definition of standard cost, the standard costing use and benefit, okay, and the last one, advantages of a standard costing, and today my agenda. So moving forward, first of all, you need to get more clarity about the historical cost, which is talking related to only for the cost of the production, okay. So here the historical cost also we call it as a historical cost accounting. So in the historical cost, there is actually, if there is any drawback, then we are trying to depend for standard costing or marginal costing, so which is the latest for management for taking a proper decision, okay. So which is only for the historical cost, we are not able to compare the performance or efficiency, okay. So here it is a method of accounting where the cost of productions only are focusing, okay. So we don't want to get more clarity about the performance in the using a historical cost, okay. So are recorded or presented based on the marginal cost or value, okay, whatever the productions it is involved, either which is talking related to direct material or direct labor or direct overhead. So only the production cost, we are not comparing with the performance, right? So here value when they have acquired or incurred. So at the time of production, what and all which is the input related to the material or labor or overheads, which is directly only focusing, okay. So it is a traditional approach. Of course, it is a traditional approach. We are not able to take a proper decisions, okay. So that is widely used in the financial reporting, okay, or they are preparing the cost accounting as a management. They want to take, if they want to check the performance, how the activity is going on. Moving forward, next one, the meaning of standard costing. The standard cost, the name only suggesting, unless you are not setting something like a norms or predetermined. So the objective which is completely, if any labors are working, materials are using, or productivity related inputs, what and all connected for the production, okay. So we are setting the major standard for the material standard, labor standard, as well as overhead standard. If you're talking related to the standard costing, of course, which is a predetermined cost, okay. So the standard cost or predetermined cost which is set by the management, okay. So then only we are able to compare with the actual, okay. So which may be used and the yardstick to measure the efficiency with the which actual cost. We are, unless you are not setting a standard, we cannot compare. For example, the 8 hours you are allotting for the workers to complete the specific task, okay. So that is a standard hours, okay. So how many product they want to produce, again the setting is standard is very important here, has been incurred under given circumstance, because each and every the major the cost which is the standard related to the material, the standard related to the labor, the standard related to the overheads, okay. So here to illustrate the amount of material, raw material required to produce a unit of a product can be determined, because at the time of producing a standardized product, of the standardized product means which is a similar product. If you try to go for the unique product, so each and every time, so whenever the product is manufactured or taking a task, so the standard is completely vary, so which is advisable for the unique product or standardized product in producing. So we need to get a more clarity about the standard setting for the material, the standard setting for the labor, the standard setting for the overheads, and the cost that the material estimated. So for example, the each of production, what materials are consumed, how many labors are required, so what and all other overheads are connected. Either you're talking related to direct expense or indirect expense. Indirect expense, which is nothing but the overheads, right? Estimated, how much raw material estimated. This because the standard material input. So what you are using the material. If you are not setting a standard, of course you can avoid the wastage. So the material wastage can be avoided. That's what the standard is always comparing with the actual. Okay, so if the actual raw material usage, if the standard greater than actual, so of course we are trying to take, as a management, they want to take the action. So the actual production, for example, the standard is setting for 10. If the actual production, maybe it is increased for 12. So there is a profitability we are able to find out. The vice versa, if the standard is less than the actual, okay, so which is talking related to the loss. Okay, so if the raw materials usage or cost differ from the standard, the difference which is called, so we are comparing the standard as well as actual. There is any difference we are getting, so we call it as a variance here. Okay, now standard cost minus actual cost, which is nothing but your variance you are getting. So what kind of variance? If there is any negative variance, obviously the management want to take the corrective step to rectify if the standard is again which is not going for the long period, again the standard want to revise according to the situations. Moving forward, there is one definition here. According to Chartered Institute of Management Accounting, SIMA, London, the standard cost is a predetermined cost, which is already decided. So based on the technical estimated, so how we are setting a standard? Because the previous data, because the previous production and the last production, the data is very important. The relevant data you are not collected, what you are setting a standard, which is there is no meaning at all. So that's what we need to collect, depend on the proper data we are deciding the standard. Okay, and material, about the materials you are setting, and the labor and overheads of selected period of time for prescribed set of working condition. According to the condition, we are setting the standard. Okay, so either we are talking related to the material standard or labor related standard or overheads related standard. So moving forward, the standard costing, which is a technique, okay, the adapted by the management to determine the free cost, to check the performance, comparing with the standard performance as well as actual performance. Okay, and what exactly where they are using and benefit, which is the usage part when you are talking. So always setting a standard which is just for controlling or reducing the cost of the unnecessary activity, unnecessary product. Okay, so what kind of the cost control step you are taking? The cost center, which is related, the cost control, the standard costing provide the framework to monitor and controlling the cost. So because majorly we are talking related to material, direct material or material or labor, overheads, where unnecessary or wasting the cost. So you can take the precautions. So the controlling is very easy at the time of implementing the standard costing. And even when you are talking related to the historical cost, which is the only focusing on the cost of production, but standard costing, we are trying to go for the performance evaluation. Setting a standard, easily we can find out the performance. The standard costing allow the evaluation of individual or department performance. So each and every one is responsible to complete the specified objective what you are setting. So that's why the standard is very important. So next one, the pricing decision. At the time of taking a decision or fixing a price for any specific product, so obviously the standard costing is very useful. Okay. By understanding the standard cost associated with the product, overall, if you want to produce any product, what kind of standard you are setting for the material, what kind of, how much you are setting for the standard for the labor or overhead. So everything is equally important. So either talking related to the product or service, the management can determine appropriate pricing strategy to ensure profitability and competitive in the market. So then only they are try to go for compete with the competitors. So the pricing is very important. So standard costing is guiding for the management to set a best strategy related to the pricing. And the next one, which is budgeted and forecasting. Always you are setting a standard, we are implementing this standard, so which is nothing but the accounting plan, the budget completely, which is forecasting, right? So that's what, by estimating the future cost based on the standard rate and quantity, organization can develop a realistic budget and forecast. So that because you attend all the inputs, resources are connected to the productions, you are producing a standardized product. So with the help of proper budget only, we are trying to take any steps to go further. Okay, next one, inventory evaluation. Obviously we can evaluate the inventory, either you are using, for example, before starting any production, 100 kg of raw material you borrow, you procure from the supplier. So how many raw materials per day consumption, each and every day the standard are monitored, right? So easily we can control the inventory. In case of the material shortage we are finding, so because of the standard costing implemented, we will get to know the difference or shortage of materials. Immediately we are taking to place. The standard costing is commonly used for valuing inventory. So the standard cost of valuing inventory means actually the closing balance and opening balance of inventory. By assigning a standard cost to unit of inventory, business can determine the value of their inventory holding and calculate the cost of goods sold. The majorly when we are talking related to the cost of goods sold, which is the opening stock. So in case of opening stock, if you are finding any shortage, then only you try to go for purchasing. Okay, so after purchasing, what and all the direct expense which is connected to the purchase, then finally we are subtracting the closing stock. Because of standard costing only, we are trying to evaluate properly. And last, continuous improvement, continuous improvement, because if the standard are setting for the first time, which can be revised for the next time, so obviously according to the condition the standard is modifying here. So we are not maintaining one particular standard for long period. So obviously the improvement we need to find out here. So majorly we are talking related to the improvement of overall performance or efficiency, effectiveness of the individual department or individuals. So the standard cost facilitate continuous improvement initiative within the organization. Everyone are important, so that's what we are setting a standard. Unless if you're not setting any standard, so which is not going up to the proper working, we are not finding. Okay, so that is what we are finding, we are setting a standard. Moving forward, the advantages of standard costing. There are too many advantages, because which is majorly helping for the management to take a proper decision, proper plan. So first one, proper plan. If you are not setting a standard, it is very difficult to take a proper decision. So that's what the standard which is comparing with the actual, right? So it helps to apply the principle of management by exception. So they want to implement after setting a standard. So how they are adapting, okay? So that is the management need not worry over their activity which proceed in the random plans. It is only for the issue of the exceptional that have been concentrated. The proper plan is required for the material, the proper plan is required for the even labor and overheads. So that's what the standard are taking a very important role. If anybody want to, as a management, want to take any proper decision, so using a statistical, using a costing method, so definitely they can take the proper decision. And next one, efficient cost control. If you are, unless you are not setting a standard, so we cannot take any proper control. So that's what the efficient cost control means. If you try to reduce the maximum cost, so obviously you can find out the profit. So here the standard costing is a tool for management to gain reduction in the cost. So the majorly again the cost is related to material or labor, overheads, and control over it. So we are comparing with the standard as well as actual. So if there is any cost increase, as a management they want to try to reduce the cost. Okay, so under this technique, the difference of analyzing and responsibility are determined, because everyone are equally important to reduce, increasing the profit and reducing the cost factor. So the motivation factor, of course, either we are motivating for labor, providing incentives, or any extra remuneration. So we are just setting a standard. So everyone are keen interested to achieve the standard which is set by the management. So the labor efficiency is promoted, and they are designated to the cost conscious. So that's what they try to take. They are try to increase their performance. Okay, so the laborers are motivated. Yeah, the standard provide for incentives and motivations to work with the greater effort. So unless you are not setting a standard, so we cannot find out any motivations or performance. This increase the efficiency and productivity. Finally the management always expecting the productivity as well as efficiency from the employee or laborers. Okay, so the fourth, the comparison of forecasting and outcome here. The greater the target of efficiency is set for the employee, and the cost consciousness is stimulated. So because we are comparing with the standard with the actual, right? So actual performance as well as standard performance, so which is contributing for your productivity. So obviously, since the process of standard costing allow an appraisal to made of personal, because we are comparing the activity in between the what and all the inputs are involved in the production. Okay, obviously the machine and method of working, the current inefficiency come into notice, then get eliminated. If you try to compare, obviously we can take a proper decision which is not contributing for productivity, the performance is not up to the standard, so immediately, so we are comparing, right? So that's what. Next one, inventory control. Obviously what you in the usage, what we are finding the use or benefit, the same thing here, inventory control also properly will happen here. So because of standard costing facilitate inventory control and simplify inventory valuation. So everything, the inventory is taking a very important role for the production. So obviously the properly, the timely you want to evaluate or evaluate the stock. If it is not shortage, means we are placing an order for the supplier. Okay, and this ensure uniform pricing of a stock in the form of raw materials, work in progress, and the finished good. So this is very important for meeting the demand, the right supply, right demand. Okay, you are expecting, because you have to go for the evaluating for the inventory. Next one, economical system. We are talking everyone, all the company organization, they want to be setting for the economical system. They are following economic system to run a business. So the standard costing system is the economical system from the viewpoint. It does not require detailed record. We are talking to increasing our revenue, increasing your productivity, which is coming under the economical systems. Okay, so the proper economic system you adapted, obviously we can find out the economical good result here. So it also does not require a big staff. It result in the reduction in the paperwork to accounting. So obviously if you are following the proper economic system, if you adapt it, obviously you can reduce your unnecessary waste or cost and need very few records. Okay, because we are not completely depending on the accounting information. We are focusing only for the production point of view. So obviously there is a saving of time as well as money. So unless you are not setting a standard, it is very difficult to take a proper decision. If you are setting a standard, obviously we can compare with the actual. Keep on watch for next section. Thank you.